Okay, welcome everybody to another Forex boot camp. I do this pretty much every Saturday around 12 p.m. Eastern Standard Time. And today I have one of my colleagues slash friends slash student on the line with me. We're going to just go through a couple of setups here. Um, he's been pretty much following my training for, it's been a couple of months now. His name is Edward. Is that correct, Edward?
Yes, sir. That's correct.
Okay. All right. So, walk me through your setup because I know I've been sharing a lot of different strategies and setups with the group, and just wanted to ask you a couple questions just to get a um, one of my students that you're like yourself perspective on how they approach the market and so on and so forth. So I know you said you trade gold, correct?
That's correct. Yes, sir.
Okay. Gold is a very volatile pair, but very lucrative at the same time because you can catch the right setup. You can then make some substantial cheese, as they say, pocket change or money. So you said that in the previous question I had asked you, you said you look at the 4 hour first, correct?
That's correct. Yes, sir.
Okay. So let's go to the 4 hour and just walk me through your pretty much your setup. I mean, does it have to be perfect? Just walk me through what you actually go through. So I'm in the 4 hour now. What do you do next?
Well, really, I'm just looking for the head and shoulders. I'm
Okay.
just looking for the well. First of all, I'm looking for the trend, right? Looking for the trend, which way it's going. Uh, Usually, I right now I've been doing a bunch of selling off,
Okay.
and that's what I'm looking for, really.
Okay. Excellent. Excellent. All right. So there you go. He looks for the trend first. So if we're looking at the 4 hour, we could go ahead and zoom out, right? Zoom out to see an overall trend of the market. Okay. Now, what I like to do in order to find an actual trend is not look at the candles, but look at the line setup. Okay. The line setup pretty much gives me a general idea, okay, of, what I can look for within the overall structure of the trend. So if we were to pull out our trend line, we could pretty much see, from the bottom all the way up to the top, right? We could pretty much try to find a trend line that bounces off the lows. Okay. Like if we see this right here, there's a low. So we try to put the line right on these lows here and stretch it out as far as we can. That normally what you do, Edward, as well?
Yes, sir. That's correct.
Okay. So here, if you were looking at this trend line, if we made this trend line a little thicker so you guys can all see it, we're noticing that gold is in an uptrend, but there are some reversals within an uptrend. Okay. And that's what Edward does. He by looking for reversals, he's actually looking for sells. So let's take a look at that real quick. I'm just going to make this line a little thicker. Okay, so that's pretty much how you would draw your trend. So you stretch it off from the bottom all the way up to the top. Okay. And then after this, okay, you start to, look for highs and lows within the market. Okay. Now, as you can see, there's a low here. Okay. So if we put, let's see, an arrow right here, right here, because these are the lows where it actually hit the trend line, right? These are the lows. Okay. And then it broke away from that, right? And it started trending higher. Then all of a sudden it came right back to the trend line. So we got to put another arrow there. That's a huge retracement right there. Okay. So 1, 2, 3, 4 touches on the trend line. Okay. Now, it could break the trend line. Okay. It could break the trend line. Okay. And what I normally look for If it breaks this trend line, like it almost looked like it wants to do it, it's got to come down, come back and touch the trend line to do one of these numbers for a reversal, right? For it to start trending lower. Okay. Now that's one way to look at it. Now it could continue its journey upward, right? It could hit the trend line like it's been doing down at the lower levels there, hit the trend line, and then continue its journey back going up and make higher highs. Okay. Because throughout this whole trend, you can see it's been making higher highs, higher lows, higher high, higher high, and then it made a huge low here, retracement, and then it made another high high. So this high, right, is higher than all these highs over here. Okay, that's why we know it's an uptrend. But then we have a break right here, a break to the downside. Okay, so you want to be patient to see if it's going to break this trend line to go lower and then come back and touch the trend line to go lower. Okay, then you have a true reversal. All right. But in the meantime, Edward probably was trading during the highs and looking for reversals during these downward sessions here and was able to make some profit. So you were able to make some money on those reversals, correct, Edward?
Yes, sir. That's correct.
Awesome. What's the most you've made? Ballpark.
Actually, just this week, just this, excuse me, just this week by itself, it was more than 3 grand.
Nice. Nice. Okay. Okay. All right. So now from the 4 hour, do you enter in the 4 hour to place a trade, or you go down to the lower trip time zones?
I go to the 5 minute.
Okay, so from the 4 hour, you go to the 5 minute. So let's go to the 5 minute, and here we look for entries, right? We try to look for entries. So now, instead of being in the line setup, we're going to go now to the candlesticks. Okay. Now I had recommended a while back, Edward, the candlestick Bible book, correct? The ebook.
Yes, sir.
Okay. And you had an opportunity to at least go over that book, correct?
I'm still going through it. Yes, sir. I have to take my time and go through it slowly and everything. Yes, sir.
Okay. All right. It's a book that I recommend to everybody to read because that book, what it does is help you understand how to read the candlesticks. And it's also on my YouTube channel. I have actually got an audiobook version of it. So if you're driving or you're jogging or you're walking to and from your local store or whatever the case is, you could pop it in your headphones and listen to it. Okay, and then go back and review it and take notes and so on and so forth. Because there's a lot of activity going on in the 5 minute. Okay, in the 5 minute, if we were to look at the high, because typically I like to mark out the highs and the lows. So we have a high here. Okay. And we got a low. The most recent low would be right here, right? And usually TradingView gives you the highs and lows as well with markers. Okay. So that's the high and low. I like to make it a different color pretty much. Um, I'll make it like marker gray. So that way I know supply and demand zones, right? Supply and demand zones. Okay. Darker. Okay, so during this session here, I'm looking to take trades when it hits the top or when it hits the low. Okay, some people call it resistance levels on top, and then they have support on the bottom, and then you have supply and demand. But if we were looking at this during the highs, right? What are we looking for? What candle are we will identify that we need to find during a high, because it was making higher highs and all of a sudden it broke to the low side, right? So if we open this up, you guys might want to take notes on this, what I'm about to share with you as well, because when you open it up and you see that the market's hitting a high point, okay, this candle, this black candle that you see right here, okay, this candle is called a bearish engulfing candle, right, Edward?
That's correct. Yes, sir.
Okay, bearish engulfing candle. So as you can see, it couldn't make any higher highs. So this huge candle right here is a tall tell sign that there's going to be a reversal. Okay, so you would mark this out, okay, as your high, right? Just like that. Typically, the candle before it, you put a box, okay, you put a box, horizontal box, and all of a sudden it starts to pull back down here or here. Now, when you see this candle develop, typically there's going to be a pullback. Let's see the second candle, there's a pullback. All right. Now, this is considered one or two things. Some people call it an order block. What you just created right here is considered an order block or a fair value gap. Okay. Now, fair value gaps are gaps within the system as well. Okay. But order blocks is also a solid block where the market needs to come back to. Now, what a lot of people tend to do as well, they wait for three candles, one, two, three, and then mark their order, their fair value gap. Okay, so it would be right here between the first candle and the third candle, there is a fair value gap. Okay, right there. Okay, and the reason why it's a fair value gap, because this candle here created a very tiny, tiny wick. If you guys can see that. There's a small little wick popping underneath it. And in this candle, the third candle, there's a wick as well. So these two candles did not touch, although you see a black candle in the middle, but there's a gap between the two here. Okay. So what happens is, for a confirmation, in order to take this trade going down, you want to wait for the gap to be filled with this candle right here. Okay. It's because it came into the gap, it didn't go above it. It came into the gap and it created this candle right here. Now, we typically call this a shooting star. Okay. Okay. A huge wick on top, a little body. So another tall tell sign that the market's going to go lower. And look what it did. It started to trend lower. Okay. So when you see something like this, you want to take your order on this particular candle. So now, once you identify that, number one is going to trend lower because you got the bearish engulfing candle. Number two, you have a fair value gap right between these first and the third candle. And then you have a pullback within the fair value gap, which is this candle right here. And that's what you want to look for on every setup, whether it's on the bottom, okay, on the top of a trend or on the bottom of a trend. Okay, so you place an order here, and typically you want to go ahead and put in your ratio. So we're going to do a short position. Let's say we entered to the right at this candle. So we'll say right at the tip of this candle. We put our stop loss above the high. Okay, so we don't get stopped out. And then we stretch this out for a 1 to 3 setup. Okay, 1 to 3. Okay, we do a 1 to 2.5 or 1 to 3. Because if you look right, okay, you've actually, with this candle over here, actually this candle right here, Okay. This candle, this wick right here went right into your 1 to 3, and you would have had a profitable trade. You would have made some money when this wick hit your take profit. Okay. And that is a winning setup. Okay. So, just to do a refresher, you can always rewind the video, but this is the setups that you guys want to look for every time you place a trade. Okay. Number one, if it's on the top of a trend, you wait for a bearish engulfing candle. That's the first step. Number two, you wait for 1, 2, 3 candles to develop. Once you see 3 candles develop, the middle candle, you're going to put a box on the middle candle, okay, between the 1 and the 3 candle, and that's going to be your fair value gap. Number three, you're going to wait for a pullback into the fair value gap, and you have to also wait for another candle, which is a shooting star to develop, and that's where you would place your trade, right on this candle. Now, if it reverses on you, okay, it hit your stop loss, you just reevaluate and you do it again. But in this particular trade, it didn't hit your stop loss and it continued to journey lower for a 1 to 3 setup. Okay. Now, do this consistently, practice it. Like what I just did was a back test, right? I just back test the strategy, okay, based on what Edward was saying. And if he was able to get a reversal trade and he saw this particular setup, he would have made some money, right? But and then there's now that you're in the downtrend, based on this setup here, you could have placed another trade going lower, but you have to wait for pullbacks, right? This is a pullback, okay, and this right here would have been a pullback as well, okay. So you always want to place your trade on pullbacks, okay. Now in this particular scenario, this would have been a really nice trade if you kept it, but just shoot for 1 to 3, and then try to re-enter somewhere else going down, right? Now, this was a nice trend going lower. But as you can see, we had created a trend line on the 4 hour, right? We created a trend line on the 4 hour. This was our trend line, okay? So it came down and went below the trend line, okay? Right? Now we can anticipate maybe a reversal. We go back to the 5 minute, because what is it doing? It's going right back into touching that trend line. So if it goes above it, it's a buy. If it bounces off the trend line, it's a sell. You see what I'm saying? Does that make sense, Edward?
Yes, sir. Yes, sir.
Okay. What did you like most about what I just shared?
Just the whole setup part, man. It's really that's what I do most of the time. That's what I'm looking for the setups, and that's what I really enjoy.
Cool, cool, cool. So you're able to identify the setups because of the pullbacks and because of the fair value gap, and knowing that you're in a downtrend right there, correct?
That's correct. Yes, sir.
Yeah, it's as simple as that. A lot of us, we tend to complicate the whole scenario. But if you don't have a strategy, right, we tend to think, okay, let's enter here. Hopefully, we'll make some money. No. You do not want to do that. You do not want to do that because if you can't identify why you got into the market, don't get into the market. You have to have written definable strategy written down on paper. So, and then once you have it written down on paper, you put it to memory. And once you put it to memory, the minute you see something like this happen, you go ahead and enter the trade based on your fair value gap. Okay, based on bearish engulfing candles. So that three setup is pretty much what you want to look for. Okay. Now, if we were to go back to the 4 hour, okay, and we were to stretch this all the way back to the bottom of this 4 hour right here and open that up, right? I'm going to show you the same exact setup that happened on the top also happened in the bottom. Okay. All right. Because this is the bottom, right? It's actually trending lower, right? And what do we see? We see this candle being a bullish engulfing candle, which is bigger than the candle before it. Okay. So all you really have to do when placing trades is wait for the bottom of the trend and on the top of the trend. And then you could set alerts with TradingView that says, hey, once once the trend hits the bottom, alert me. Because once it alerts you, you can go ahead and get back onto the charts, right? Get back on the charts and see if you see a bearish engulfing candle on the down trend. Because once you see it going down, you see this bearish engulfing candle, you can anticipate, right, with confluence, anticipate a change in the market. Okay. All right. And I'm going to show you something as well here. Let me just do this here. If I can find this tool. All right. So this candle is what we identified as your bullish engulfing candle. Okay. That's your bullish engulfing candle. All right. Now, since you saw that happen, okay, you're going to place, you're going to do one of these numbers, the candle before it on the body. You're going to put your horizontal box like this. Okay. So that's A, your order block. Okay. Or B, your fair value gap, right? All right. So let's take a look at this. So if this is your order block, what do I say about order blocks? What do I say about fair value gaps? You gotta, the candle's got to come back into the box. Okay. You already got your trend line. Okay. This is your trend line. It's got to bounce off your trend line or come right back into the box to trend higher. And that's exactly what it did. Okay, you got your bullish engulfing candle, you got your box underneath it, right? And what did it do? It came back, either it went into your box, didn't go below it, didn't close below it, okay? And then you would have placed your trade either on this candle or on the third candle. Because this candle right here is a push-up trade, a push-up candle, okay? All right. And that's what you would place your trade. Okay. Now, if we go to the 5 minute, now this is the 4 hour. If you go to the 5 minute, let's try to find that in the 5 minute. Okay, it's right here. Okay, so here it is. Here is the downward trend that's about to end. And what do you have right here? A bullish engulfing candle because it's bigger than this candle right here, the black candle. So if we take this tool again, this is your bullish engulfing candle. Okay. Now and then when the candle close, okay, where would you put your box? Well, you could put two boxes actually. You could put it on this candle before it, like we did previously in the 4 hour. Stretch it out. We have another box right here between the first and third candle, right here. Okay. Now, typically, what people do is put it at the end of the wick, right there. You see this wick? So this little is a gap right here, fair value gap. There's a gap right here. So the market has to come back and touch the gap somewhat, try to touch the gap and then go trend higher. Okay. And that's exactly what it did on the 5 minute as well. So if you miss entering the trade over here, okay, or you could wait for it to come back, which it did right here. It hit it 1, 2, 3 times, okay, with another bullish engulfing candle right there. It's interesting. So the bullish engulfing candle is your friend. Look for the bullish engulfing candle, okay? And then it came back, faked you out with this right here, and then it started to trend higher, okay? So if you were to wait for it to come back, you would have placed your trade based on a long position. Let's say right here, stop loss below, look at the value gap, and you stretch it out for 1 to 3. So 3, it's acting up. All right, so 2.99, 1 to 3. Let's round it up to the nearest. But yeah, there's your trade right there. There's your profitable trade right there. So 1 to 3. Now, some people say, well, why don't you stretch it out down here for your stop loss? Well, that's a huge stop loss. That's a lot of money to lose right there. So you don't want to do it that far down. But you just put it right underneath the fair value gap, right, for a 1 to 3. Okay. Now, this is what a lot of gurus are charging thousands of dollars for you to learn. But it's so simple if you just back test and look for these setups in historical data on the charts. Go to the bottom of a chart, look for these setups. Go on the top of a chart, look for these setups. Train your eye to see these setups on a consistent basis. Because once it starts to develop on future setups, you can go ahead and place your 1 to 3 ratio trade and try to get a profitable trade that day. Okay. I normally recommend people do 2 to 3 trades a day. If you find yourself doing multiple trades, you're over trading. If you find yourself losing a lot of trades and trying to get back your money, if you're in a demo account, you're revenge trading. You want to avoid over trading and you want to avoid revenge trading. Okay. Just come back every hour, every 4 hour, every 5 minutes, whatever trading, whatever your strategy is. If you come back every 4 hours, in that fourth hour, look for a setup at the 5 minute. Okay. Try that. 4 hour trading session. Okay. It happens every 4 hours. Set your clock and then come back, drop it down to the 5 minute, see if you see any setups. Okay. And that's the way I trade, and that's the way Edward trade. Correct, Edward?
That's correct. Yes, sir.
We keep it simple. We keep it, we try to be as consistent as we can going forward. And if anybody that's listening to this or watching this YouTube video, if you're interested in the journey my mentorship program, I'm gonna put my email in the description area, and just email me and say, teach me this subject matter, teach me, and I'll tell you exactly what packages you can sign up for. And then you guys could be part of my mentorship program, and I will do one-on-one trainings with you guys. I'll invite you to live sessions. I'll add you to my Facebook group. There's about 300 plus people in the Facebook group. Um, Private chat is about over 30, 40 people in the private chat. Um, so yeah, I mean, if this is something you want to learn and you want to coach like myself, who keeps it simple, then reach out to me via email, and I will definitely get you the information that you need to help you become profitable. Now, Rome wasn't built in a day. It's going to take some time to train you. It's going to take some time to get these setups down. It'll take some time. I'll help you create your trading plan. Okay, and it will help you create a brokerage account. And once you have a solid trading plan, get you into some of these funding challenges where you can actually, take a challenge and test your trading strategy in the challenge to see if you can pass. And if you can pass the challenge, they will give you a profit split of 80-20, where you keep 80% of the profit and they make 20% of the profit. And they pay out. Um, some of them pay out once a week. Some of them pay out every 2 weeks. Some of them pay out every month. So we'll definitely link up. Reach out to me so I can share with you exactly what I'm all about. I do have a website that you go to. I'll put that link in the description as well, metrofxtraders.com, and you're going to get access to a lot of my resources there as well. But with that being said, I'm going to end the session by saying thank you so much for watching. Thank you, Edward, for being my guest today. I do appreciate you. Any final words, Edward?
Uh, just let, just to let them know that remember, not every day's a trading day.
That's correct. Yeah, that is correct. Sometimes the setups won't happen, right, Edward?
That's right. Yes, sir.
Um,
I've that's how I've learned. I've learned it the hard way. It's been a few years now that I've been with you. Been learning a lot. It's taken me. It's been slow process, but I've gotten it. I'm starting to get it. More and more.
Awesome. Definitely. Every day is a learning process. I'm still learning myself, but I want to thank you so much for your input today, Edward. And you have a fantastic trading week next week, okay?
Likewise. Thank you.
Thank you, sir. Thank you. Thank you, everybody. Bye.